Welcome to Crypto Waffle episode 34. Today, indeed, topic 1, copper gold ratio is telling us that alt season is coming. What is this rare macro signal means for crypto rotation? Take profits like a pro. We will discuss take profit strategies and how we ourselves may look to exit the market. And as always, gems of the week. So, kicking it off as usual, let me take the stage and show you guys the gold, silver.
Before we say anything, how close are we to altcoin season?
Oh,
How
matter of months.
unbelievable, Jeff.
It depends time horizons, isn't it?
So I'm feeling like
So first of all, before we do this though, so CryptoSI, what are some of the main things that we look at for alt seasons? Do you remember?
I look at
From a macro perspective.
from a macro perspective, I don't look at macro. I'm not really a macro guy. I've only been a macro guy since I've known you. From a crypto perspective, let me do it from a crypto perspective.
Yeah, go on, from crypto perspective.
BTC dominance is number one, and we want generally around 18 months after the halving. That's normally when we see altcoin season.
Right. And then from a macro point of view, can you remember some of the things we've looked at with regards to that? And I would argue that Bitcoin dominance is one of the macro factors.
What's that? What was that? MSI thing that goes up above 50?
Yeah.
RSN goes above 50.
That's this pink line.
Global
48.
global M2 liquidity,
Yeah, that continuing higher.
another macro factor. And
We talked about the other one last week.
what's the third one?
Begins with a D.
Oh, the dollar.
Yeah.
DXY. Yes.
Why? They're some of the key macro factors. Now, today, I'm going to walk through the copper gold and what this signifying effectively. So just for a visual perspective, this in pink here is the ISM, which as we know, once we get up above 50, this is when the business cycle usually starts to expand. And this is the part what we've all been waiting for and are still waiting for alt season. We had a kind of a false flag back here in like Q4, Q1, right? When ISM did touch around 50, but has since come back down. But the key thing with the ISM on its own is that we still are seeing this, what looks to be higher highs and higher lows, i.e. the trend is our friend. So that's what we want to continue to see. Now, what the copper gold ratio is saying is that every time, or if you look at it over the ISM, every time copper gold seems to break higher, and copper gold here is the blue line, by the way, we get that uptick in the business cycle. So i.e. copper gold down here broke, business cycle broke out. Again, down here, higher, business cycle broke out, and so on. Also, bear in mind this is a monthly chart. I've also put these on line graphs rather than candles because they're easier to look at. On the RSI perspective, which is the relative strength index, copper is at the areas where every time we've been down there, we've seen a significant move higher of the monthly time frame, i.e. first one back here in June 01, then 2008, 2009 crisis, 2016, 2020, and now. So what should happen next? We should see a nice upper end momentum shift in this RSI. We should start heading towards these higher levels where we want to be, where it is probably around that 64 level, where we can be like, okay, RSI is kind of getting oversold, business cycle, the ISM / copper gold ratio might be looking to turn here. And that would also give us an indication to when the business cycle or cycle is over and altcoin season could be done. So this is the tweet you need to be looking at. If you have to read it 5, 6, 7, 10, 15, 20 times, please do so. Okay, this guy is an absolute G. The amount of free alpha he posts is a joke, quite frankly. He's also partnered up with, I think it's the Milk Road Show, who now does their weekly newsletter, I believe, or puts his inputs into it. So he's basically showing you what I just showed you.
Let me read it. I'll read it for the viewers. Markets are all about cycles, the same cycles repeating over and over again. And one big cycle indicator might be flashing a signal right now. It's the copper gold ratio. The copper gold ratio is important because it's a signpost that tells us that where we are in the economic cycle. It has big implications for risk assets like stocks and Bitcoin. And it might be making a big cycle turn. What is the copper gold ratio? Yada, yada, yada.
Yeah, the copper gold ratio measures the price of copper relative to the price of gold. And it's just like when we effectively chart Bitcoin against USDT or Bitcoin against ETH or Bitcoin against Sol. Like you're seeing which one is outperforming effectively. So i.e. on that chart I just showed you, if I'm to get rid of the ISM, what you want to see in this chart effectively is copper is outperforming gold when this is moving up. So i.e. this window here, this window here, this window here. And what I believe we're going to see will be this window here. So there he shows us this. And here he has kindly outlined, I didn't have time to do this unfortunately, he's clearly outlined these phases. So for more than 3 decades, the copper gold ratio has moved in long-term cycles of roughly 3 to 6 years. We can separate each individual cycle into 2 phases, a rising phase, green, and a falling phase, red. So i.e. green would be momentum of the ISM going up, and red would be downturn of it effectively. So what does the copper gold ratio mean for risk assets? The strongest periods of performance for US stock indices have historically coincided with rising phases in the copper gold ratio. And you can see here again, there's done this very nice graphic. When the S&P, you can see when copper gold ratio spikes up, S&P typically rises in those same windows as well. Even if the copper gold ratio isn't a massive spike, like here, it's quite a small, like small grind up and to the right. And we saw the same in the S&P. And you can see it here and here. Whereas equity bear markets and extended flat choppy periods almost always coincide with copper gold ratio falling phases, although a falling phase is not always bad news for stocks. So what we've outlined there is, so again, this period here where you could say the S&P arguably from point A to point B was still rising, but copper gold ratio is down, is that the copper gold ratio going down isn't always bad for stocks. And this current period we're in also shows us that, because copper gold ratio has been going down. What's happened to S&P arguably since, well, the start of 2022 up and to the right, even though we had that bear market kind of just in the front half of it. All of Bitcoin's mania bursts, 2012, 2013, 2016, 2017, 2020, and 2021 have coincided with rising phases in the copper gold ratio, while all of Bitcoin's bear markets have coincided with the falling phases in the copper gold ratio. So if we go back to this chart and we whack this on the line, so for anyone that's at home, you can do this yourselves. You then overlay Bitcoin. And then we put that on a log chart. So on off. You can see, i.e. the bear market phases of the gold copper ratio. This down period here was this bear market in 2011. The down period in the gold copper ratio from this peak here also marked the top of the 2013 cycle. Again, the peak here in the gold copper ratio. Actually, no, we've just done that one. No, it didn't. That's 2017, sorry. So gold copper ratio rising, 2017 cycle up. We've hit a peak, sell off, bear market. Again in 2020-21, rising gold copper ratio, rising Bitcoin price. What happened next? Sell off. Obviously, Bitcoin has grinded higher from here. But as he said earlier, it's not always bad for stocks. And obviously, I think the argument there is, okay, it hasn't coincided with Bitcoin coming down due to, I think, institutional flow money, i.e. the ETFs came in what was it, Q4 23, 24?
Yeah, ETFs seemingly have invalidated quite a few things that stood true before.
Well, and to be honest, you could also argue that Bitcoin wasn't correlated to M2 as closely as it was prior to BlackRock.
No, it wasn't.
But the M2 thing, we've put up many a times, there's an argument to say that since we've been plugged into BlackRock systems, we have literally been tick to tick
Yeah.
like literally.
Yeah.
And prior to that, we weren't dictative. So it just
That's why
shows you the power of these big institutions like BlackRock, Vanguard, Fidelity, and others.
like we've done this pump without retail.
Yeah. So far, they will
So
come back though. They will come back. Everyone always gets dragged in by price. But continuing on with this, remarkably, the end of every Bitcoin mania burst coincide with a top in the gold copper ratio within a matter of days. But what does the copper gold ratio actually represent? Whilst copper and gold are both metals, their respective prices move for very different reasons. Gold is largely a monetary metal. The gold price will generally rise due to a demand for safe assets, rising geopolitical tensions, and economic uncertainty, whereas copper is largely an industrial metal. The copper price will generally rise due to industrial demand for manufacturing, construction, and infrastructure. So the copper-gold ratio rising could be a sign of lower demand for safer haven assets, lower geopolitical tensions, less economic uncertainty, a strengthening global economy, and improving global manufacturing. And that also falls into line with obviously the ISM picking up, because that is the business cycle and businesses doing better. Less uncertainty, more people having overtime, more money in people's pockets, economies doing better. Whereas if the copper gold ratio is falling, it could be a sign of higher demand for safe haven assets, higher geopolitical tensions, more economic uncertainty, a weakening global economy, and a deteriorating global manufacturing. So the big question is the gold copper ratio finally turning, and why is China so important? And he goes on to explain, but in your own time, please read over this. He did this brief update because that first tweet was actually put out on June the 10th. So it's obviously been 3 weeks or what by now that's been put out. And the update, he was just saying, are you watching? It's ripped higher again this week. And you can see that on our own chart here. If we get rid of Bitcoin, but it's back on to candles, and we go back to say a daily, you can see there's been a very clear change of trend in the short term of the gold copper ratio. A nice big move higher. Obviously on the weekly, still doesn't look great, but everything's got to start somewhere. And what he's saying is this could be the start of the copper gold ratio now rising.
Do you sell your gold and buy copper?
Arguably, yes. I mean, I sold my gold to buy silver because rather than looking at a copper gold ratio, I was looking at where are we? The gold silver ratio. I sold all my gold up here. So for my gold, I got 102 pieces of silver per ounce. Now you only get 91. So I'm, what's that? 11 gold, 11 ounces off, better off, effectively.
Per ounce of gold.
If you really wanted to do it, you could go silver copper and see what that looks like. So there's all these things you can do with charts, which is why I like them so much, when you can just compare assets. And you can see that silver copper is kind of like a stable coin. It just ranges. So when this gets to a peak, you sell your silver for copper. When it gets low, you sell your copper for silver, and then just keep going. And that way, you're increasing your holdings of both assets the length of time that you do it. That's effectively what I'm doing with the gold-silver one. I'm increasing both my gold and silver holdings by selling at these price points. I put third time's a charm here because it's only the third time in history we've ever gone about this level. So to pick this, or to sell up above this cool 100 area, we're a very lucky person to do it.
Well, I guess you know, because it doesn't stay up there for long.
No, it's just been reverted back in.
Yeah, you know what's going to happen.
So now, and this is why you've seen silver kind of outperform in the short term, you should see, I believe, this tick lower. As much as I'm bullish on gold, this should, or silver should outperform gold now. Both assets can fall down, correct? But silver probably falls less, because gold has had a ridiculous run. I know I've been banging a drum looking for gold to come down for a while, and it's been very slow, but I'm going to get too ahead of myself, but I think we could be having that moment that it can better. But that is the gold copper ratio. Please get yourselves over to his Twitter. Have a look at loads of his data that he puts out. And obviously, you can follow along with his updates like this when he puts them out. And obviously, you can add all of this stuff to your own tool belt as well, which is great. So what do you think of that?
I love it.
Another nice macro indicator.
Another nice macro indicator. Do we have any negative indicators? Or, because sometimes I worry, are we just handpicking the bullish stuff? Or is there anything that suggests...
Well, you could also use all the ones we've used for bullish to also in a bearish case, can't you? So when they start getting to elevated levels, i.e., okay, if I share my screen again, we'll take the ISM, for example.
So at the points where people start to say this time it's different, that's when we need to come back and remind them, no, it's not. It's always the same.
Exactly. So in the ISM, you can see here, I've already marked out where I think the ISM will be tapping. When the ISM is by around or in and around the 55 to 60 area, I believe the top will be in. Okay, in the ISM, and indeed that will be the cycle. And obviously, no one ever perfectly picks the top. Right? If someone says they perfectly pick the top every cycle, they're complete bullshit. Like, they just haven't. Yes, they might have got within the top within a couple of months or two, but that's realistically what everybody's aiming for. Like, no one's looking to pick it by day. If I nailed the top by 4 or 5 months, happy days, I don't care. Like, it really doesn't bother me. So the ISM, yes, you can mark out these key things like this here. And for the copper gold ratio, you could also arguably say, if we're to mark out an area, say between, so looking at previous support/resistance areas, I would arguably say that at this first, I'll change the cover of this. At the first yellow line, that's where I'd want to be paying attention. And the yellow and the white line, where I'd be thinking, okay, hang on a minute, this looks like it could be topping out. And also, if you look at the general trend of this copper gold chart, is down and to the right. So there's an argument to say that this rally might not be as strong as the previous two. Hence why I'm saying the yellow one is where you start paying attention. Because if it starts to struggle past the yellow, there could be a signal there saying that it's going to be an early turn and that rally was kind of short-lived. So what does that tell us? In a macro point of view, that could maybe mean room for a short, sharp bear market. Like if copper gold was to only get to here, and you're like, hang on a minute, but it hasn't really rallied. Well, this could definitely tell you if this reverts back down, okay, we've got a short, sharp bear market potentially even come in.
I can't see that happening though. It does never happened before. So it'll be a first.
Who knows? Or then again, you could argue the one we just had is a short, sharp bear market. That, like, you could definitely argue that sell-off in the S&P here was a short, sharp bear market.
I like to say bear market has to be, like we say, a recession, 3 months of down Bitcoin in a row, then I'll call it a bear market.
Yeah, I mean, because that was a 21% correction. During the bear market of 22, the S&P corrected 27. So this was only a 6% move off similar bear market.
Yeah. It was a big expansion.
Yeah, it was just more time. That's all it was. There's more time, more choppiness. But yeah, all these indicators, so like the dollar as well, like Gabe was saying, if we were to see a big, strong rally in the dollar, like he said last week, what we're looking for now is a dollar to continue to fall. But I think in the short term, we do get a dollar bounce first, which would, and I think, did he say the dollar's like a 9-month lead?
Yeah.
Something like that. So that would signify in 9 months' time that if we get a bounce here in the dollar, the crypto probably pulls back a bit. And where does 9 months take us? Q1. And I'm pretty sure I've mentioned on here before that in Q1 I talked about this possible correction. Because if this cycle was to extend, that's when the correction would be. I think in around Q1/early Q2. And then we rally for that final blow off if it's extended. Because the longer this dollar drops, the longer the cycle goes in, to be honest. If this dollar were to continue to drop all the way down to 89, all the way out until Jan 26, like, this bull market has got plenty of legs in it.
I love that.
You can use all of these indicators in the same way we look at them bullish, i.e. at the moment, we want the dollar to continue to fall, to be bullish for markets. If the dollar starts rallying again, like, warning signs. The same for like looking at the crypto stuff, like Bitcoin dominance. We want to see this to fall over. If Bitcoin dominance falls over, you're then looking, okay, where's some major support on this chart? Okay, bear market could be in, you're probably looking at a bear market bottom, potentially between 39 to 44 in Bitcoin dominance. And ultimately, if you have a longer term perspective, it doesn't matter. You could start buying Bitcoin anywhere in here. Anywhere in here between May 21 to March 23, you would now be up.
Oh, massively.
Regardless. Like, just for perspective, May 21, which is here. So Bitcoin was probably around the 46 to 30K range. Yes, at the time, if you bought here and didn't buy anything else, you'd be negative for the bear market. But with a longer term perspective, you are now probably pretty comfortably up about a 2x. So you can also do the same when you're looking at the dollar dominance chart. So this is USDT plus USDC. Now there's like a clear change of trend to me. What we're looking for next is to create another lower low. There's our higher low, and we got a series of lower lows as well. If this was to revert higher, it's an indication that, okay, it's going to be bad. Because if we were to get back above this 8.7%, I'd be going, hang on a minute, it's time to take a bit of risk off. Like, what you don't want is dollar dominance is going up.
Yeah.
Effectively. Obviously, it becomes difficult to track this stuff when they're putting new ones in and whatnot, but you can use all of this to your advantage. So it's not like we're just picking it for the sake of it being bullish. You can use every single one that we talked about in a bearish scenario as well.
Fair enough. Fair enough.
So on to take profit strategies. Walk us through how you normally take profits. I know yours is very different to what I do.
Every cycle is different. Different cycles, different tools. The last cycle, the take profit strategy was stable coins. So everybody's expecting we've hit the top of the market. Bitcoin's going to crumble. The alts are going to get absolutely destroyed. We will sit in stable coins. Problem with that last cycle was that UST fell apart, even though people were getting, I think it was 20% a year or something crazy on them, or 40%, something like that. Something.
Market.
Yeah, the UST, the yield on UST was like 20%. Sure, it was either 20 or 40%.
That would be waving red flags at my face.
Right.
20%.
I don't know if I ever told you about the time when I was on Twitter and I messaged, no, I didn't message, I tweeted that UST was not stable because the algorithm worked that UST was backed by Luna and it could get into a death spiral and UST would depeg. And I basically just said what happened, but before it happened, I wasn't the first one to say it. Loads of people had said it because it was obvious. It was maths.
Yeah.
And loads of people like piled in on me. Like they were like, oh, this guy's so stupid. Oh, I hope he loses his job at so-and-so project. Oh, he's an idiot, blah, blah, blah. And then obviously it happened. And periodically I'll message those guys again. Obviously they've now all taken Luna out of their profile. Yeah. And they've all gone, where did they all go to? I think they all went to like Cardano or something like, I can't remember where they all went to, but they all went to some other pile of crap. So they all went somewhere else. But I message them from time to time. I will post those on my Instagram. I should post on my Instagram. So yeah, so stablecoins was last cycle's safe haven.
How do you do it though? So rather than where you allocate it, like once you take it, how do you choose when to take profits? Like, is it a 1x? Is it 50%? Is it a 5x? Or is it per asset? Do you put in, say, $1,000 per asset and you say, right, when that's 5, I'm out?
I take profit when it's gone past November and something scary happens. That's how I took profit last time. Because
you have no like set levels.
No set levels. Because it's silly season, right? So whatever you think is sensible, it's not sensible. It's silly season. So supposing you say your set levels are, I'm going to sell Solana at $1,000. That would be sensible. Then Solana gets to $1,000. Now, in silly season, Solana might hit $3,000. Granted, it will only be there for like a week, but it might hit there. So what I would end up doing is I would keep Solana past 1,000 up to 3,000 in silly season. And then you'd get that chop, which you always get, where your legs get chopped away from you at the end of silly season. It brings it back down to and then I sell it. So I generally end up not selling it on the way out.
So you wait for the blow off, effectively.
Yeah.
For that final pump, you wait for it to reverse, and okay, that was the top.
That was the top. Yeah. Now I'm scared. I'm selling everything out, all into stables or all into Bitcoin. This time, I think it'll be portion into Bitcoin, portion into stables. And this time, for the first time, I think I'm going to play options. I'm going to portion into options. And what the options will be is that if Bitcoin is still this price or is below, I don't know, a certain price, I will be able to sell it at, I don't know, 150K, and I'll pay the premium. So I think I'll split it, not equally, but I think I'll split it between those three. I think those will be my exits this time around. Yeah.
What?
Yeah, those will be that's my exit. So what are you planning to do? How are you taking profits this time around?
So from last cycle, and for everyone that's been watching, you may or may not know, but this is my first full cycle. So last cycle I didn't get until March 2020, and I rode the whole lot like everybody does. You ride all the way up, all the way down, and then you kick yourself because there's nothing to show for at the end of it. Anyway, you stay in that rabbit hole, and you are where we are today. But to make sure I secure stuff on the way this time, because I'm a visual learner, I use something called a trend-based fib extension. And I will quickly just do a demonstration of how they work. I learned these, shout out to Michael Harding at Blockchain Sensei. Absolute goat. So, if we get rid of this, we don't have this. This is Coinbase. Let me remove my drawings. So what you do is, again, it depends on your time frames. I'm a longer term investor, so I'm normally looking at the weekly or the monthly. So you come over to the left hand side of your trading view, you go to the third one down where it says fib retracement, click the little arrow, and you go to the second one that is trend based extension. So you then click a low before before the latest what am I call it? The latest move, effectively. So, for example, let's take this low here we had in June 5th, 23. So we click that little green candle, we come to the top, and we draw the lowest point of the pullback in that time. It then gives you, so you can see that a bit clearer. I drew from the green candle, I waited for the bottom to slightly come in. The next week, I then went to the peak, and I drew to the low of that pullback. That then gave me some targets. Now, typically, I won't take profits until we're above the 1. So I'd normally start around that 1.610, is that, I believe? Yeah, 1.618, sorry. There, and then obviously each area or each line is a next take profit. So what I will do is I'll get a clean chart up rather than the one that's full of horrible drawings, so everyone can see it a bit better. And I shall remove the drawings in this one. So this is coin recently. So what you could do, and I think this is again me personally, best case scenario to see some take profits in coin. I don't know what this price is, by the way, but we're just looking at it for chart purposes. I would take this low here back in June 24 or Jan 24, sorry. I'd click this, I'd go to our peak, which would be here. I've used this peak here rather than these peaks. So that is the peak of November 24. And then I come down to our bear market low, or not bear market low, sorry, but our pullback low of 7th of April 25. And it gives you these targets for coin. So as you can see here, I then mark them out on my screen. I put these little lines across. And every time we hit one, I will trim a certain percentage of my bags. Now, what I like about this is that depending on where we are in the cycle, like you could have a set description, and as you can kind of see on my chart here, I already have my areas drawn out in green. So because I believe we're still quite early on in the cycle, i.e. we haven't had silly season and we're approaching it now, I would not trim 30, 40, 50% of my bag or of the asset holding at each level. Like with coin, I've been doing 10%. Like we trimmed a couple off down here, got back in, whenever it was, like over here, got back in down here, increased our holdings. You go back up. I've recently just shaved off 10%. I'm hoping we get a retest of this blue box. Yeah, if anyone watches my market updates, I am looking to get back in this blue box below where I sold, again to increase some coin holdings. If I believe we were at the later stages of the cycle, I would not be going back in. I'd be keeping the cash in the account. But because we were quite early on, I still think there's opportunity to go back in, maximize those gains. And then obviously as we get later on down the line, and depending on where we are price action wise, I might decide on the next one, okay, I'm taking 20%. This is where I'm going to start paying myself. I'm going to give myself 20% of my holdings. There you go. Nice job. Well done. Have a bit of time off, whatever it is. Next one could be 10%, and then so on all the way up. I do this for each asset. So again, for Tesla, you can see we had a take profit literally at that peak of like 475 before it come down. So that was perfect when we sold. I think I only did 5% of my holdings, managed to get some cheap shares. I think I went back in at about 317. So I didn't get the low, so I didn't know how low it'd go. But again, I increased my shares amount. And again, each level higher, I'll be looking to trim off. And again, I do this with crypto as well. So you will see on the Bitcoin chart, here's all the ones currently. So we had one at 107. If you had sold here and got down, pulled back in down here, class. Like, if you managed to sold a Bitcoin here at 107, you've increased your holding by what, 0.25 or something. It'd be a nice little BTC earning there. Next take profit is around 140. This head and shoulders gives us a target at 150. So I'd be inclined to trim a little bit there. Probably get some sort of a pullback. But from that move onwards, I would say from here, I wouldn't be looking to go back in. I'd start stacking that cash. So I use trend-based Feb extensions for each asset, and you can draw them on each asset. Like for Sol's a really good one. Realistically, you could do a trend-based Fib extension from this low here all the way to this high and to a pullback to this low. And it gives you these targets. Now, I'm not sure where I've drawn my most recent one. I believe it might be. Yeah, okay, so mine's drawn from there. So mine's drawn from that level there. I've gone from this low or this pullback up in Jan 24. I went to the high of Jan 25. And then I've gone to the low of April, 7th of April. And it gives me these targets. So these targets take us out to that 1026 level. If I go back a little bit, you see that other one. It does give us slightly higher targets to the 1143. And that's probably because we took the first point at the low of September 23 rather than the low of Jan 24. So I use that. I mean, there are lots of other methods. Another one of our colleagues, he uses the at 1x, take out 20% of your initial investment. At 2x, another 20% of the initial investment. 3x, another 20% of the initial investment until you have your initial investment. And then you can trim off what you like when you want. Because the idea of it is in this space to get your hard-earned blood, sweat and tears back as soon as possible.
Yeah.
So between all of us, I mean, I will probably use a mix of mine and yours as well. Like I know in the short term, I was telling you the other week, SPX, like, come on, time to sell, didn't sell it, wait for the pullback, then went.
Very for the pullback, then panic sold. It's recovered.
But you still made money. That's the clue here.
Yeah. Because you make money on the entrance. Yeah, not necessarily make money on the entrance.
The other thing is like the trend-based Fib extension is really good because even if you have been sitting in bags that have been stagnant, like it doesn't matter. You just be impatient. And thankfully for myself and a couple of clients, we've been in the likes of Syrup been in some hyperliquid per other positions that have been where we've been needing to trim off, respectively. So when we do have these big moves, I'm messaging the guys like, you need to trim off here. This is what I would do. And because I know them on a personal level, I can say, right, in your shoes, I'd say this. And to another client, I'd be like, right, okay, well, you should be doing this. Just, you shouldn't, or I might be a case of don't trim anything. You've still got plenty of time.
Yeah, I think some people,
different entries.
Some people have got different risk tolerances. And so sometimes you have different risk tolerances at different times. So I sold SPX the other day, and I feel like it was mostly because I didn't want the discomfort of holding it at that time. Now, I knew that we're not that far. When I looked at it, I thought, SPX is kind of at the sort of price I would buy it. So why the hell am I selling it? Like, after it's come from 170 down to 115, I would buy that normally if I'm not already holding it. So why am I selling it? And when you look at it like that, you're kind of like, right, do I want to be in this game, or am I feeling like this is going to drain me and I'm not going to see other opportunities, X, Y, and Z? So jumped out of that, jumped into Aura, and now I'm waiting for Aura to do what it's supposed to do. Yeah. So I think sometimes when you're not using fib extensions, when you're not using TA and you are using vibes, you need to be careful for your
vibes
well-being.
Actually change from one day to another.
Yeah.
And then you have to, what I quite like about the trade-based fib extensions, like regardless of what's happening in the world, i.e. headlines are being thrown out, I'm not like, oh my God, I need to de-risk the whole portfolio. I'm not fussed. And again, realistically, it comes down to people's personal, it comes down to them. Because realistically, my time horizon is a hell of a lot longer than, say, yours. Very different. And this is what I quite like about the consulting stuff that we do, because you know everyone on a personal level and you can edit it to their well-being.
Yes. Yeah.
Not a single person that we talk to has the same stuff.
No, they're all different.
Strategy, they're all different. Yeah, same. They are all different.
Well, I think
about it.
I think what works for me, and I try to get everyone else to do it, is that I have my SPX. I have those bags. My SPX Aura, I have things like that, but those are the mess around bags. Those are not, I'm not thinking about keeping those till November. Those are just for the here and now. Those are fun time bags. Now, the good thing about that is that kind of gets the gamble in me out. And then I know the things that I've actually,
main bags,
the things I've actually allocated to, I don't look at them. Those, well, let's wait. Those are a conversation that we have after Halloween. After Halloween, we get into November, the nights start to draw in cold, everybody's jumping around about how rich they are. That's when we have to start looking at those bags and being a bit more cautious with them. Currently, there's not much happening with those. No. So it's interesting.
I haven't seen any new cars or watches on the Twitter timeline as of recent. So
no.
We're not at that stage yet. Once you start seeing that sort of stuff pop up, then you know it's time to start trending.
Do you know what it generally is? It's when people start to behave obnoxiously. So you'll see influencers wearing a lot of Louis Vuitton and suddenly crashed his Lambo or he done this. Those are the top signals. We're not seeing that yet. Influencers
friends that aren't interested in crypto start messaging you about crypto. Then right, I'm going to sell my bags to you.
Yeah. But I think for me now, it does seem like a lot of the people have already messaged, which is a bit worrying.
Definitely. I mean, you could say that for the pump into Q4, but I think that's specifically around the memes. Like they weren't interested in anything else.
Yeah.
It was just the memes. And even then, it wasn't as many people as I thought would, maybe. And I still think there's plenty of room for this to go before you get... Because sometimes you only get 2 or 3 people you wouldn't even expect ever to message you.
People that you don't even speak to. It's people that you don't speak to.
They could be complete random. And they've been maybe watching you or following you for a while on Instagram or whatever. And then out of nowhere, they're like, if you were me and I had X amount, what would you give?
Yeah.
That's when you know nearing the end.
Yeah. Hey, Financial Navigator, do you remember me? We went to nursery together. We haven't spoke, but I hear that you're into crypto.
With $10,000.
Yeah. And if you had 500 quid, what would you do with it? Those are the top signals. Those are the top signals. We haven't had those yet, to be fair.
So let's get into, recap. Everybody does it different, and everyone's take profit strategy should be focused on their own investment strategy. You could use a mix of things. You could have set targets. You could go, well, once I get 50%, I'm going to trim off 5% of my holdings. Once I get 100%, I'm going to trim off 10%. It could be something as simple as that, or it could be trend-based with extensions, or it could be the gut feelings. It could be, okay, after November, start seeing the timeline get all happy and everyone flexing houses and stuff. That's when you know. Like, you could use a basket of all of these things. You could use the 1x strategy, take out 20% of initial. All sorts.
Final words are, don't overthink it and don't worry about it, because right after this cycle, in 18 months' time, there will be a glorious buying opportunity for the next cycle. So try not to worry about it, especially if it's your first cycle. Even if it's your second cycle, don't even worry about it, because there will be another cycle. There are consistently more cycles. A cycle.
I'd also remember that you're here to make money. Unless you're in it, quite frankly, for the tech, which I don't think a lot of people are. And I'd arguably say that I am not. Well, you are.
I am.
I'm going to be completely honest. You are here to make money, so make sure you do what you are here to do. And there's a famous quote, I can't remember who it's by, but no one ever went broke taking profits.
Yeah.
It doesn't matter if it's a 20% gain, a 30% gain, a 3x rather than what you thought could be a 10x. Realistically, if you made money, you did well.
Yeah.
But unfortunately, in this game, you're making money and there's someone out there losing a shit ton of it. So don't be that guy.
Yeah, that is true. But even if you are, there's another cycle. So you can lose more money on that one too.
Plenty more time to do it.
Yeah. I actually haven't lost money on the cycle yet. Don't know how people do that. Touch wood.
Quite frankly, I can't say I've lost because I never sold anything, if that makes sense.
What I mean is, from the bottom of a bear market to the bottom of the next bear market, are you up or are you down? Like every bull market I go into in better shape.
Well, I can't say because I haven't had a third bear market yet.
No. So we'll see.
Actually, no, I'd argue, sorry, I haven't had a second bear market.
This is your second one?
2022 was my first one because I didn't really know where I was in March 2020. I didn't realize we were just coming out of one.
No, yeah, we were literally in the depths of one, and then we literally
young and dumb and just started throwing money at things, which worked.
Congratulations, yeah. I was gutted. I missed DeFi summer, and I missed DeFi summer because I wasn't paying attention enough to the overall landscape. I should have hit.
Always something though. Always something.
We've not really had nothing this time round. This time round, it's just been ETFs and TradFi. Memes, I guess, but memes is not really tech.
AI.
Yeah, AI's been it. Yeah, you're right. AI's been it. AI's been it.
Stuff. Also, you could say the RWAs, all that sort of stuff. And that's all tech, arguably.
Yeah, but they were flash in the pans, though, weren't they? They weren't as big as, I think it's DeFi summer. I think this time around it was AI and memes. Last time it was DeFi and NFTs.
Well, there'll probably be something else that pops up soon.
Gems of the week. What have you got for me, sir?
Right, I have got a stock specifically aimed at our UK followers. Now, I assume other people in different circumstances globally should be able to get access to it. But in the UK, I shall share my screen. You may have heard of someone called ARK Invest, which is
Kathy Branch.
Kathy
Wood.
Kathy Branch.
Effie branch.
Brilliant. Anyway, ArcInvest, great stock. And I've said this many times before, and I'll say it again. Arguably, I think in my lifetime she will become a bigger name than Warren Buffett. Now, that's putting it out there.
Whoa. Kathy Wood to flip Warren Buffett. It's a big shout.
Well, maybe not in her age, but I think like percentage gains turns, you would have by her time.
Yeah.
If she continues to stay and does what she does now, I think ARK Invest could do better than Berkshire Hathaway.
That's a massive shout. That is massive shout.
But I am an optimist on innovation and new technology. So let's see. Anyway, in the UK, you cannot get access to ARK Invest. Okay, you just can't do it. So, what do you look at instead? There is an alternative called SMT, Scottish Mortgage Investment Trust, PLC. Now, in the broader scheme of things, their holdings are similar. ARK, I would say, is arguably of the riskier end of it. I'd say SMT is a bit safer on the risk level spectrum. Again, it depends on what your risk appetite is. Like for me, these aren't risky at all. Whereas for someone in their maybe 50s, 60s, would be or your investment advisor down at St James's Place or Fidelity would be this is too high a risk, madam. So this is where the individual stock pickers will go. Anyway, within this, if you go online, you just type in SMT holdings, you open up the Google link and it will show you what percentage is held into what companies. They own a lot of similar companies to ARK. Main ones, I believe, are like NVIDIA, AMD, Coinbase, and some other things. Anyway, big macro picture first. Obviously, it had a hideous bear market. And unlike most stocks, this went down 61%. And it's an ETF. So a big drawback. We then kind of just chopped it out in this range. And I think arguably there is this head and shoulders, as you can see around the marked time. The monthly here, as you can see, that green box there being the neckline. That broader target for the head and shoulders from the breakout point, which was here, actually targets around 1,390, call it. We did have this pullback here, which again, if this monthly candle of April had closed below the neckline of around 900 for easy decimals, yes, that would have been invalidated, but the monthly candle closed up. You can see we had this massive wick below, which could definitely have scared a lot of people out. And thankfully, myself and clients have the macro data on their side to not be scared and actually bought the dip. But yes, this big sellout on a monthly basis, you could say on the weekly, oh my God, we got the close down. The week of April the 7th actually reversed, looked to continue, but it didn't, which is why I was looking at the monthly and the. In the shorter term, we also have another head and shoulders. Shoulder, nice big round head, and we have broken out. We broke out last week on the Friday. Today, it looks like we retested and bought back up. So the target for the smaller head and shoulders within the bigger head and shoulders is around 1,300. The bigger head and shoulders target is 1,382. From current price to small head and shoulders is a 26% gain. To big head and shoulders target, a 33% gain. Which in stock market land is mad. Yes, I know, very boring for us. But even the likes of Coinbase, like I said this, when did I do this one? Was it a couple of weeks back? I believe. I did this as a gem of the week. Coinbase in the last, 2 weeks, is up around 45%. For a stock, ladies and gentlemen. Yes, you heard that right. A stock. And if you had managed to snag some on that April dip, then you are up a sweet 135%. That the space.
that April dip on that Coinbase looks kind of similar to the dip on the Scottish mortgage one. So I guess it was all around the same.
I mean,
environment.
Coinbase is part of the Scottish Mortgage Trust ETF.
Right. Okay. What else is in there?
Well, let's have a look. Let's have a look live. Let's have a look live.
See, it's good because it takes a lot of risk off the table when you go into these things, which I see as potential gains being taken off the table, but
Yeah.
horses for courses, right?
If your risk appetite isn't as high as everyone else, then yes. So top holdings are Space Exploration, whoever the hell that is.
I think that's a Spanish supermarket.
I think
Well,
it's actually, yeah, you're right.
yeah, free markup. That means free market. I think that translates to. Let me allows a look.
Meta, Spotify, TMSC, Ferrari, ASML. So some big names in there: C Limited, Netflix, Nvidia, Shopify, Stripe, Wise, all of this stuff. So if you asked if anyone's got an account here with some sort of financial advisor, if you said to them, "What about SMT?" There we go. That's probably well out of your risk appetite, Jeff. You should be looking at this. And our in-house made.
These are quite good companies that they've got, but I guess these small parts are quite small. Let's go back to the what they got the major holdings in.
So the top 10 or top 30 holdings, a nice visual.
Yeah.
Are all of these. So some big names there. TM Semiconductors, more semiconductors. Wires is some sort of banking thing. The video semiconductors.
They're all darlings of Cloudflare.
Tech. So as much people are saying with tech's going away, not a chance.
This BYD company, I think that's one to look out for because I'm seeing these things everywhere now.
I don't see them everywhere. I'd rather own Tesla than BYD, but yes, they are a competitor.
Well,
I'll tell you what, this one is interesting. This here, I remember looking at this when I first got into stock.
Yeah, go on.
I'm pretty sure. Let's actually see it. I assume it's this. Is it this? Italian International. So. What's that? It's Nora Innovation. There you go, NASDAQ. Yeah, wait, have a look at that. Oh, look at that. Tasty. Right, ladies and gentlemen, what have we got here? Nice consolidation phase. As you can see, marked by yellow. We then have our break. We then have our retest. What do you do on the retest? BTFD. Buy at the fucking dip. So, using our trend-based fib extensions that we looked at earlier, we come over to here, trend-based fib extension. We will use this low of June 24. We will go to the high of Feb 10th, and of the assumption that this was the low, obviously, if we made new lows, you'd have to drag it to it. But on the assumption that this is the low, there are your targets. So, again, I said earlier, I start around the 1.618. Because we are so far away from that, you could definitely say, well, I want to start trimming at the 0.618, which I'm not going to say no to. So if you are to mark out all these areas of interest, typically the top one is I'm going to be really greedy. So normally I'd just double down and take out at that one just before the top. But if you are to get in now and you are to go to targets, so your first target is in 1.7x, second target 2.4x, third target 3x, fourth target 5x. And you know the beauty of this? You can do it all tax-free in a stocks and shares ISA.
I wonder why you didn't have this as your gem of the week.
Because I hadn't thought about it till I saw it. And that's one tip.
Let me see how much. What's the up from the lows?
On what from here?
Yeah, see, means
if you let's say, okay, someone was smart and they just DCA'd during the bear market. So let's say they had an above average price of, say, 40 cents. Is that fair? So you haven't exactly bought the bottom. You haven't got a shit price at the top, but you've got in an average price of 40 cents.
Yeah.
From there, if you went to the peak that we had in, was it Feb? You're looking at a 6x. To where we are now, you're still up 1x.
Yeah.
Now,
Yeah.
a tip for people when they're researching stocks or want to look at ETFs, but maybe think ETFs, just not enough risk for me. I want individual stocks. So what do? You go to ETFs like S&T. You then look at all these holdings. You look at all these names. You would then look at ARK Invest. So if we go to ARK Invest now, ARK, Bayshire and ETF, and we want to look at holdings, go onto their website, holdings here. So you look at the holding. Now you look for similar names. So I saw on SMT a minute ago, I saw Tesla, I saw Coinbase, I saw Roblox. Didn't see, definitely saw Shopify. Definitely saw Shopify. So they're the top 10 holdings. So what you would do is normally you take the top 10 effectively, because they're the ones that company or the big boys perceive as the safest bets. So in this case, space exploration, the Spanish supermarket, Amazon, Meta, Ferrari, Shopify, whatever this is.
ByteDance? Do you mean whatever this is?
I've never heard of that.
ByteDance, they're the people that own TikTok and all this other stuff.
Massive. Yeah. So you look at all of these, right, and you go, okay, these are the main names I want to look at. Then you get all these other ETFs up, i.e. ARK, it could be BlackRock, it could be Fidelity, it could be Vanguard, it could be VanEck. Like, you could open up an array of ETFs or tech-focused ETFs. And what you want to look at is the individual names. If the individual names, like Roblox, keep coming up, or Tempest AI, or Shopify, if they keep coming up across the ETFs, you buy those in particular single stocks. There's no need to get the ETFs. You buy those single stocks. You don't need to do anything else, like, at all. And obviously those smaller ones, like we just showed you, that, what was it, or an Aura or whatever it was.
Aurora, yeah.
Yeah, in that SMT, they only make up,
yeah, they were tall.
1.5%.
1.5, yeah.
Tiny.
Right.
So that shows you, yes, they think the stock will do something, otherwise it wouldn't be there, but they're not overly, what's the word?
They're not overly leveraged, not leveraged, but they're not overly, they're divested, right?
They're not expecting it to do, like, they're not expecting it to prop up the portfolio, but they do reckon it will play its part within the ETF, hence why it's there. So if you're looking through ETFs and you're like, well, I don't know what to buy, I'll just buy the NASDAQ. Don't just buy the goddamn NASDAQ. With ChatGPT nowadays, right, you could go and just search BlackRock Growth ETF or VanEck Growth ETF, whatever it is, whatever the sector is you're looking for. Download 4 or 5 different ETFs. Bang them all into ChatGPT, or from what I remember, Claude was actually better at this sort of stuff, but bang them into one of the AIs and say to it, in the top 10 holdings of each ETF, which companies' names keep coming up? Bang, bang, bang. It'll give you a portfolio, effectively, of what you could be invested in. And then you can say to it, well, how should I weight this portfolio? And it will talk you through blah, blah, blah. Obviously, it can't give you investment advice as it's only an LLM. But if I was you can say, if you were in my shoes and you are a BlackRock asset allocator, what would you do? It tells you. Yeah. So not that you got to listen to it because it's just a computer, but
it gives you an idea, right?
Exactly. So all of this stuff you can do yourselves.
Yeah.
It's just whether you've got the time and the patience to do it. And at the end of the day, if you were to buy that an Aura or wherever it is now, and it reaches those top targets like I just showed, I'll actually probably use this as the gem of the week next week. Obviously, it's very high risk. You're looking at a near enough 14x.
But it's not really very high risk. It's because it is backed up by an actual company where if people just take the money and run away, somebody will go to jail. Whereas SPX is backed up by nothing.
Yes, compared to the crypto stuff, but I'm talking like when you, to be honest, it's probably me having my TradFi hat on. So, look, this bit. I mean, the market cap's only 10 billion. It's not massive. Like the majority of the top 50 cryptos are bigger than that.
BYD is only 6 billion. I think BYD is a gem. I'll have that next week, but I need to do my.
What's your gem of this week?
My gem of the week, sir.
After that stock fest.
Well, mine's not actually a crypto either.
Oh, it's a stock?
No.
Oh.
No.
It's an NFT, isn't it?
It's an NFT.
Damn it.
Yeah, absolutely right.
I'll get that one before.
You know it because we were lucky enough to speak about it earlier.
It's going to be the penguins.
This is today's CryptoSI's gem of the week. Now, the reason why this is my gem of the week is because people are still saying NFTs will not come back. Now, earlier on today, me and the Financial Navigator were talking because that's what we do. We don't have lives. Literally, we buy crypto, we research crypto, and we talk about crypto. And that's all we do. So that's what we were doing today. And we were discussing fine wines. What was the other thing? Fine wines.
Wines, watches. You can throw art into it actually as well.
Wines,
NFTs.
Watches, art. We were talking about those three, and we were saying that they go in cycles. And they go in cycles which are kind of similar to the financial cycles. So when the rich people get rich, suddenly these things spike, because what else do you do with all of this money? Eventually, you run out of feet to put your trainers on. Eventually, your guts will die if you drink too much champagne, or your todger will fall off if you're running around with too many of these fast girls. So what do? You buy wine, you buy watches, or you buy art. Now, if you're in crypto, you buy NFTs. So last cycle, when we got to the highs of the cycle, people were going bananas over NFTs. I think this time around, I think it will be the same. There will be NFTs that fly by night, come quickly and go quickly. But I think that the ones that you can really rely on are the blue chips. And there are blue chip NFTs. CryptoPunks, Bored Apes, Pudgy Penguins, probably say Fidenzas and Autoglyphs. I don't know about
the Xcopy.
I can't see Xcopy. Didn't Xcopy go crazy?
I think Xcopies are still sweet. Here's the other big one I hear about. Crypto dick butts.
Yeah, I don't know. I wouldn't call those blue chips. I'd say doodles are more likely to be blue chip.
Yeah, I could say doodles is a blue chip.
Doodles are less than 1 ETH each.
Meebits, I could say. I would also say.
Meebits, maybe, yes. But I think Meebits got rolled in with CryptoPunks. I think the same company that owns CryptoPunks now owns Meebits.
You could say, what's that one? If you go down a little bit. Milady, maybe.
Miladies,
yeah.
Miladies. Izuki's had a terrible time this year, but they're still around. So they are now probably...
many left, if I'm honest.
Good, right?
Yeah.
Like, as far as watches are concerned, there's 5 or 6 brands. As far as wines are concerned, there's probably more wines. But NFTs you probably want in between the two. More than watch brands, but not quite as many as wine brands. MFers is another one. World of Women, more than likely, ends up hanging around and coming back. But yeah, these are the things that I think are a decent purchase in the upcoming thing.
People can't afford a Pudgy as the floor price is, what's that, 20k?
The floor price of a Pudgy is 20k. I think if you can't afford a Pudgy, you buy a Doodle. You buy a Doodle.
What about the little Pudgies though?
No, I don't like the spin-offs. I don't like the spin-offs. I don't think the spin-offs have their own brand or their own community going specifically with them. And also the spin-offs are kind of like what the real holders got for free and then sold so they could make money. So you buy a spin-off and you're just someone's exit liquidity. So I'm not a massive fan of the spin-offs. Doodles I like. And there's Crypto Dick Butts.
See, I like the Crypto Dick Butts. When I swear I messaged you quite a while ago saying we should buy one.
Crypto Dick Butt.
Yeah. Let me see if I can find when I sent you, like what time I sent it to you. I want to say off the top of my head, they were about 0.4 ETH at the time.
Well, they're 1 ETH now. But it's the problem with these are, what was the price of ETH at the time? So ETH could have been at 4K at the time and it was 0.4. So maybe they haven't moved. But I don't think these are going to move one way or the other until it's time for them to shoot up or crash. So, yeah. So my gem of the week is Pudge. In fact, now I'm going to revise it halfway through. I'm going to make my gem of the week be something that is achievable for the general public. Doodles. 1 ETH gets you in. I believe there were only 10,000.
A partnership with Will Ferrell every now and then.
With NERD?
But I
Oh,
had a partnership with him a while ago.
So Doodles are planning to do their own token. The Doodleverse premiering now. Yeah, Pharrell Williams, there he is.
There he is.
Music by Pharrell Williams and Lil Yachty, Lil Wayne. You'll know who all these people are. You're young.
I haven't got a clue, mate.
Sway Lee, Coyle Ray, all that stuff. So yeah, so
cool.
Yeah, that's my gem of the week is a tie between Pudgies and Doodles. Pudgies if you've got a little bit of to throw around, Doodles if you're sensible. But I think
the new person.
Yeah, I think everybody should have one of the two. So I think I might get myself a Doodle. Make sure I'm in.
But
let me have a look at this. Let's see where we are. Where are we from all time?
Let's get on the can we go out further? Can we go all time?
Yeah, look how far away we are from all time highs. 95.
How high did we get in that Q4 pump recently?
This one here?
Yeah.
6.7 ETH.
And ETH was what at the time? Around
3.5K, 3K in January.
Around 2.5, 2.7, something like that.
So what we can see definitely is that as soon as we have alt season, these things go ballistic.
But we've now gone to lower those in the bear market though.
Yes. Now we're at the lowest of all time.
See, that doesn't fill me with confidence just from a TA perspective.
Like what?
At least the bear market low would be in now.
See, now I don't know if these act like TAs because they don't have the liquidity.
Yeah, I know, but I'd just like to see the bottom in, if that makes sense.
Yeah.
But that it looks like there was a really sharp sell-off not too long ago.
Yeah.
When was that? What's that about?
That's May. So that will be shown in 3 months. That's this cliff here. What is that? That's 50% overnight, and it hasn't stopped. I wonder if there's any news.
Well, I was literally just searching that. May. Doodles NFT token stalls after airdrop. What's this? Oh, that might be it. Following an anticipated airdrop, the Dodo tokens market cap declined by roughly 40% on May the 9th. A newly launched Dodo token from the Ethereum-based NFT project.
Dodo or it's Dude?
It's Dude, isn't it? DOOD. Yeah, sorry, I don't know why I'm calling it Dodo. According to the data from Dexrin, Doodoo's market cap fell over 100 million shortly after launch to around 60 million at the time of writing. So do you not think it'd be better play if you're going to do it? And because it's more liquid, I mean the token rather than the NFT.
I don't know. I feel like the token, it feels like a spin-off. It feels like, and that's why I think,
mil market cap now.
yeah, and that's why I think this just goes downwards. I think you give the token to people who have already got the NFT, so they've got something to sell, and then they sell it to the suckers, and then look at you
Do you
suckers.
still think the NFT would be a good buy here?
Yes, I do. I do.
See, I personally, and again, this is just me because I'm a technical buyer, I would be waiting for the coin, the doo-doo coin to show me a bottoming pattern in the coin before I went in on the NFT. Because the price of the token, I would have thought would give you the signal first before the NFT.
Yeah.
Just because it's more liquid.
Yeah. Yeah, maybe, but I never see the correlation between the token and the NFT. I feel like the token, they've just made it for the sake of there being a token.
Yeah, but I'm sure they'll do something with it. Like they're that big. I'm sure they're not that stupid either.
We don't.
Unless, of course, they're looking to just absolutely rug the project.
Well, I guess if we look over the last 3 months, is there an argument to say that maybe
there's an argument to say there might be some sort of bottom looming, but
yeah,
it's been confirmed.
No, nothing to say it's been confirmed until maybe we go back up to.
Yeah, I'd like to see like a new low put in, higher lows, higher highs.
Yeah,
That's just over a short month or two.
Yeah. Yeah, so that's the Doodles token. But I'm not a fan of these NFT spin-off tokens or NFT spin-off projects. I like the main part, the main meat of the project. I think that's the way to go.
Right. Should we get into predictions?
Let's do that, sir.
Let's see how we performed last week. So, kicking it off with the mighty Bitcoin. We're all, in fact, wrong. Oh, crap. Where were we Monday last week? Where were we? It's Monday here. Where were we on the day? It would have been
93K.
Well, when we did the predictions.
No, it can't have been.
No, it would have been. We must have been around the 101.
Oh, do you know what? The problem is we had a guest on, didn't we?
Yeah, I think we were around this area.
Yeah, so I was writing down the
predictions.
Yeah, his prediction instead of the normal. I'd normally write the price there.
So we were in that 101, 102. Everyone else went bearish. I went bullish. I counter trend, and was successful in my thoughts. So we hit mine, and unfortunately, we're quite a way off. Sausages and CryptoSI prediction.
Yeah. All right.
So thank you very much, guys, for that.
There's going to be I think there's going to be a theme here. Possibly. With that. Yeah. You get Bitcoin right, you get the rest of them right.
Right. Render, I'm pretty sure I went to the top of the channel, which was around, what, the 350?
You went 330.
Oh, okay. What did we take? We went to a high of 343. So, yeah, good with me. Oh, okay, mine was there then. I assume Gabriel was with me. Is that right?
Yep. And I'm right page. I said 230.
230?
Yeah, there I am down there.
Actually, I didn't even see that. The mega bears did not work. Didn't even realise you were down there.
I didn't even see you down there, mate.
Yeah, unfortunately, no correct answer so far for you, but Gabriel is off the mark.
Gabriel got it. Gabriel said 324.
Yeah, Gabriel got it, 324, and me 330. We then had hype. So I maybe went a tad. Again, unfortunately, CryptoSI, too bearish. I went probably a tad bullish. We've only hit a high of 41.23. I said targets of 40. What did I say? 42.50?
Yeah, 42.5.
Yeah, just shy. And we have hit Gabriel's target of 39. So well done, Gabriel, nailing that one.
Gabriel's done pretty well so far, you know.
Yeah. Well, me and him level at the minute.
Yeah.
Yeah, we're tired. Again, Monday. Where's Monday? This is Monday. We did syrup. We went against the trend, something you shouldn't do in a bull market, and we all were wrong. So that tells you something there. The trend is your friend until it's broken. The trend remains syrup's friend.
Syrup is doing amazing numbers at the minute.
And this is one that we had trend-based fib extensions off of for a while. As you can see, there's not many left. Only 3. There was quite a few. And then finally, SUI. We unfortunately haven't hit the bulls targets, or the mega bulls, which was Gabriel and CryptoSI's of around 320. But we have and are now sitting on one as support at 280.
Oh, mate.
Take the victory.
Take the victory. Dubs in the chat. Dubs in the chat. Dubs in the chat. Well played,
Gabriel. Sorry, Gabriel. Better luck next time.
So Financial Navigator, you and Gabriel, you bested him.
Yes, obviously.
Yeah, you bested him.
I'm just getting big-headed now. I take it back.
3-2.
I take it back.
I got none right last week. I think that's my worst performance. I think that's possibly my worst performance ever.
Possibly.
It's the most bearish I've ever been.
Yeah. The trend was our friend, and unfortunately, you were caught off guard. Gabriel nailed some nice ones at hype. I was just probably a tad too bullish on that. But no, he did very well.
Excellent. Good job. Let's go into this week's one. Now, I'm going to take it seriously.
Right, what assets?
BTC, obviously.
Yeah, obviously.
Let's
have a little look. What we got?
What's on the board? Miss Ford.
What's up in the last 24 hours? Oh, that same moving. Jupiter. Let's do... We got to do Fartcoin or SPX.
Yeah, we'll do SPX.
All right, okay, I was going to say Fartcoin. We'll do Fartcoin and SPX. They're the means. What other ones? I was going to say Arbitrum. Just because it's still moving.
Yeah, Arbitrum's doing all right. All right, so what did we say? SPX?
Yeah, SPX, Fart are the 2 means.
SPX and Fart. And you said
Arbitrum, and then, one more. I've just looked at the 7-day movers, really, and just pick one of them.
Yeah, I was going to say...
If anyone wants us to do predictions and stuff, by the way, do just let us know in the comments.
Yeah, that's a good idea, actually. People should say...
We will do them.
What they would like. What was I going to say? I was going to say Arweave.
Arweave, yeah? The ARW?
AR. Just AR.
Just AR. Yeah, we can do Arweave. Oh, I start looking good. Oh, Jesus.
There's definitely a trend there, right?
I mean, there's a higher low in, but marginally. What's the other one that's similar to Arweave? The storage fit.
Filecoin.
That's it. What's that looking like? Just out of interest. That's Euro. I don't want Euro. Ugh, that's just looking as bad.
Similar. It's interesting. I guess it means that decentralized storage as a narrative faded.
Yeah.
But
not looking good, bruv.
But is this a time to buy?
If you're gonna buy one, Arweave looks better, but they both look pretty trash. Yeah, I wouldn't be buying any of them.
Interesting thing is, these technologies are actual things. They actually work. Like I've built websites and hosted them with Arweave, paid my $1 or whatever, and the website's up there for the next 200 years.
Yeah.
There has to be value in that, surely.
I would have thought so.
Like we've got crypto dick butts, but decentralized storage.
But they're cool. Is Arweave cool? No, but crypto dick butt is. Right. So for Bitcoin, I'm going to mark in yellow where the price is at when we make the predictions. So just so we know. Where do you think we're going this week? I'm actually going to have to remain bullish, and I'm going to go. We're going for a run to 110.5. What's come there?
We're starting H2.
Yeah.
We are starting H2.
And we break out in the next couple of weeks.
Yeah.
There's too many people out there that seem to be flip-flopping / sidelined for my liking.
Yeah. Okay, I'm going to go with you.
What, 110.5?
111, I'll say.
111. Sweet.
All the ones.
There we are. Fartcoin, where do you think? Look at those. Those past predictions, perfect, by the way.
It's because we know what we're doing. That's why.
Shop.
We know what we're doing, right? Back to the top of the range. 140? Or is it no lower than that, isn't it?
164.
No, not that high.
145.
No, give me 140.
Okay.
Give me 140.
There. I'm going to go a tad higher than you. I'm going to say 150.
Crikey.
Mate, fart and SPX aren't going to hang around for no man.
Financial Navigator. That's what you are.
They will just move. They have no respect for anyone.
Fair enough.
So that is that. SPX, where do you think? We've had a lovely little break up to the old highs, a retest of some higher support. So where do you think will happen next?
150.
Conservative.
No, still, what is that? Still 25%?
Conservative C.
That's still about 20%, mate. Give me a chance.
I'm going to go for highs. 175.
Wow. You really think we're moving?
Yeah, buddy. I could be a week early, but I'm going with it. There we are. The mighty Arbitrum. Now, I haven't looked at this in a while.
This should be a horrible chart.
Ooh, look at that. Look, you can see I was looking at it here. Look, lovely little double bottom there. You see that?
Yeah. Played it out.
Yeah, lovely move. That's probably when I last looked at it. Around October 23. Good job I took my eyes off it, quite frankly.
It's an amazing project, right? They've got so much talent there. So many good builders there. So much good technology. It's amazing, but they've got a few people with really heavy hands just trying to force the direction of the project. From a fundamentals point of view, they are ruining what should be the best DAO in the ecosystem.
Do you not think it could come back, though?
From a fundamentals point of view, no.
You think they've gone too far?
I don't know. I think they become like a XRP, whereby people buy it because people are buying it. But it started off supposed to do something, but then they won't do that. So maybe, but
I mean, there's a potential falling wedge here, as you can see. I've marked out, and a double bottom potentially at play. I mean, the falling wedge would put it to reach around $1 again, 90 cents, something like that.
That would be nice.
If we're to get back up there, you could say the bottom's probably in.
Yeah.
And if you're starting to see this stuff, along with the likes of SAI, Aptos, and some other slow movers move, another sign in my eyes that alt season is upon us.
Alt season is coming. Yeah. All right. CryptoSI permeable. Can I get 55, please, sir?
Oh, that's even more bullish than any of mine today.
Is it? Is that crazy?
Massive move, especially for ARB. Like, if it had broken out of this downtrend, then yeah, fair play. But that's a 60% move.
Is ARB the star of next week?
Could be. Could be. I mean, I was going to go bullish, but I wasn't going to go that bullish. I was going to say 45.
I feel like it's just it is quite oversold, isn't it?
Well, I don't know. Let's have a look at the indicators. Because I have 0 indicators on my screen at the moment. Well, RSI is not either bought or oversized. Relative strength index is saying it's slightly above average. The weeklies, you're looking all right, though. Yeah, there's nothing really screaming to panic. It was 4 hours. Yeah, we were a tad overbought, sold off. But trend is our friend until it's broken. We could be going for a breakout soon. Yeah, I'm going to stay with mine 45.
That's sensible. You've obviously come to win.
Yeah, I don't come to participate. And are we? Let me get ring of a read. Where do you think we're going? Now, like Arbitrum.
No, this is much worse than Arbitrum. Oh, but it's got a double bottom.
I'd say Arbitrum's worse.
You think so?
Yeah, I do that. Are we? At least you've got like, you've seen a nice big rally back at some point recently.
Yeah.
Whereas Arbitrum, you've seen, I mean, arguably you could say this is that rally. From, what was it, 45 cents to $1.20. But then you made new lows, whereas Arweave hasn't. You had that big rally.
Almost.
God, that's nuts, eh? It's from $3 to, what's that, $50? Crazy numbers.
Arweave was one of my picks, you know, before this cycle started.
12x.
Arweave was one of my picks before this cycle started.
And there's an argument to say double bottoms here.
All right, let me add Arweave back to my thing. This is going to be my gem of the week next week, you know.
You can't have both.
Why?
Earlier you were saying you were going to do, what was it? One of the stocks.
No. What did I say I was going to do?
Yeah, you said not a stock, a different, something else you were saying earlier. I'll have to watch it back.
Yeah, there was something else, but I've changed my mind. I've changed my mind.
You can probably tell we both do things entirely different from the other, just from how much like change our thought process.
What, you don't like the erraticness of my choices, no?
No, I can't deal.
All right,
There's your double bottom.
Right, where are we going back to then? What does that say? 9.
Wait, typically you would wait for us to get back above this neckline of 8 something, and then you go on the retest of the $9. Then you play the move to 18. But obviously, I know what you're like. You'd like to front run this, so you get in now and you probably get out on fresh lows.
Yes, higher lows, much higher.
Yeah, you get in now. You have a stop loss at say new lows of say 440. Cut your position there.
Oh no, yeah, no, I wouldn't do that. If I'm in it, I'm in it for the duration.
No. There's no point. Protect the capital.
But I don't
set a downside risk.
Okay, yeah. So what you say if we're in like that one where it does make a lower low? No, I think it's
You're protecting 251% gains if you go into the target.
Yeah.
So you're risking 2.5x for a 16% downside.
Yeah.
Because realistically, what you don't want to see is this create new lows from here. Right? If you come anywhere near this, like,
I don't think it does. I think that these projects that actually do something, I think they have to come back into fashion.
well, right, where are we predicting? I'm gonna go bullish. Where do we want to go?
I was going to say 6 620. That's not enough, is it? 650.
Yeah, okay, I'll join you. 650. Right, over to you, sir. Quickly cash us out of the damn SUI loan.
Yeah, I almost
Plus
put,
in those profits.
I almost put us into the group. I almost said that we should come out of this SUI long.
You should have called a community vote.
I should have, because this has been bugging me for a few days. This precarious position. All right, so our PopCat long is looking horrific. I think we got tapped out of our BNB long. Oh no, we closed that last week, didn't we?
Yeah.
And we only
last week you and Gabriel just doubled down on SUI.
Yeah, we only had the one position, and it was SUI. It's done well for us. We're up 28%. I will close at market price.
Stuffy stuff.
Okay, our balance is now $114, and that's including this $10 that we're down on PopCat. So we are
Steady wins the race.
Yeah, we are doing well. Little bit by little bit, and then all at once. Oh,
So which trade are you taking this week?
syrup has just been added.
Oh, actually, another thing. Add our referral link
Yes.
for this hyperlink device we're here.
Right, how do I do that?
Yeah, referrals.
Enter
Code Crypto Waffle. All caps. Enter code. You're using the Crypto Waffle. Boom. We will now be saving 4% on
legacy rewards. Where does it show which code we're using? Doesn't guess. Right. Trade.
Which one are you taking? Which one would you like? I'm not gonna lie, I'm feeling really, really like, I don't know why, but I want to go for Arbitrum. And I have no reason why.
Arb is on here.
But then I also just feel so much safer going with SPX or fuck, man.
Yeah. We can't do Arweave.
Arweave's not on there.
No, Arweave's. Oh, yes, it is.
Arweave is big gains.
Arweave is big risk.
Yeah, but if we put a tight stop, we should be alright.
All right. Do you want to do Arweave? I'll do SPX, or vice versa.
Yeah, I'll take Arweave. Let's do it. All right, let me get my 4-hour chart. Let me just assess the situation. I don't know that, but 4 hours, but yeah.
We're gonna go.
No, I'll do what we said. I want to stop at 4.45, and I want to take profit for 6.20.
Okay, $20 or 25.
It's 30, isn't it? We normally do.
Well, it changes. You want to do 30?
Yeah, we normally do 30 each, I think. What did we put on the SUI one? It must have been $60, no?
No, it wouldn't have been, because we would have got more back from that.
Oh, right.
Right, so let's place this one.
Yep.
It's Arweave long, and SPX.
SPX is an absolutely beautiful chart, by the way. It's just stunning.
Gorgy. Take profit.
Are you going to use your one, 150? Or you can go between us at like 160.
No, we'll do 1.5. Oh, actually, no. Do you know what? Yeah, we'll do. Okay, let's do 160. Stop loss.
I reckon
110.
well, yeah, I was gonna say 115. So yeah, 110 I think is fine.
If it goes down to 110, I'm buying. By the way, getting right back in. I am right back in.
So imagine we just held our own ASPX trade. You see on the screen where we previously bought it.
Yeah,
This is the trouble with trading. I prefer to just sit in positions.
yeah. Look at that. Opened along, closed along. We got tapped out.
Unbelievable, Jeff. We were tad early in that long.
Look at that. I know. And then a few days later, off it goes. Shoo.
Well, timing is also very key.
Yeah, timing is. Unless you're just going to sit in it and wait.
Yeah.
Um.
Anyway, we're on. We're all positioned.
Yes, we are. We have got a AR long and an SPX long.
Yeah.
And I guess that's it.
Yeah, that's it. Wraps up tonight.
That wraps us up. Over only a 36 minutes overboard.
Yeah, pretty good. I enjoyed that.
Yeah.
That was good, that one.
Everybody make sure that you check out cryptowaffle.fun.
Yeah,
There,
cryptowaffle.fun.
there will be.
Use our new hyperliquid referral link.
No, it's not up there yet. I'm going to add it when I add our gems.
It's not on there. It's cryptowaffle all caps.
Yes.
I'll do 4% on trading fees.
It will be. Oh, so let me see if that's been added properly.
But on my end, I can see you've used our code.
Oh, can you?
Yeah.
Yes. Come on.
But we will have some news for all funds that come from these referral links, by the way, what we do with them.
Yes.
But that is for a later date.
Yes. Yeah.
So we can't reveal our master plan just yet.
But we have got a very, very good plan.
Yeah.
Very mastered. All right. Thanks everybody who's stayed and watched.
Yeah.
The Instagram gang on mine, and I guess the Twitter gang on yours.
Yeah.
This one's going up on my YouTube. Oh, why am I showing this? Let me show that, Carl, you idiot. See you guys later.
Until next time, adios.